Hello friends, I Dipesh on behalf of JKSA classes is here yet again with another Ind AS for CA Final FR, that is Ind AS 40 investment property. Before I start this standard, I would like to make two disclosures. One, before this standard, make sure that you have studied PPE. If you have not, I would request you first go through that standard and then come over here. It is so very closely related. After you finish that standard, if you come to this standard, it finishes off in Zifi. So that standard is very, very important. So it's a request that before doing that standard, don't enter this standard. Second, you can see notes on your screen. These notes will have a lot of short forms because of constraint of space. So I would request you to sit with pen or pencil. So you write down the full form of the standards. Am I clear? Chalo. So investment property chartered. It's a fairly simple standard. This standard has been divided into 5 parts. One is meaning of investment property, classification, recognition, measurement, reclassification and disclosure. What is investment property? Meaning, it consists of only two things: land, building or both. From where did we get land and building? Either we own it or we have taken on lease. Which you used to call it earlier finance lease. That means we have got right to use. Correct. From the lessee's point of view, we have got it ROU, right to use. So land, building and property, from where did we get? Held as owned or ROU. And for what purpose we are holding? We are holding for rental income or for capital appreciation or for undetermined use. That means we don't know whether we'll use it at PPE or we'll use it as investment property. Then also we classify it as investment property. Am I clear? Yes, sir. So in what is investment property? Land, building or both, which we are holding by virtue of ownership or by right to use under lease, and we are holding for the purpose of rent, capital appreciation or undetermined use. Am I clear? For this chartered, I have written down few examples. First example is hotel. Is hotel a PPE or an investment property? It's a PPE. Why? Because the tariff not only includes the price we are paying for the property, but it also includes the price for services given by that hotel. Correct. So significant is for the services also, not only for the room which we are occupying. Am I clear? So hotel is a proper business and hence it should be classified as PPE. But if any property we are letting out, like flats on rent or property on rent where we do business, that property may basically the owner is charging rent for the property and not for the services. If he is charging for the services, say 60,000 is the rent of the property and 3,000 is charging maintenance. That is for services. That means cost of services is negligible in the rent. Hence we say that is an investment property. So again I say, when you let out the investment property, LO stands for let out, without significant service cost or with significant service cost. LO is let out and this is without. If the property is let out without significant service cost, that means you are charging the rent only for the property, then it is investment property. If you are letting out the property along with the major service cost, then chartered it is not an investment property, then it is your business PPE like hotel. Second is lease chartered. Lease 116 defines lease from lessee's perspective and lessor's perspective differently. Unlike AS19 where there was a lease which can be classified as financial lease or operating lease both for lessee and lessor. 116, Ind AS 116 does not do that. From lessor's point of view it is operating or financial. From lessee's point of view it is lease until unless it is a small value item. So over here we are talking about property, so it's a big value item. So if you have got the asset on lease, correct, right to use, we have got the property. Now how we are using that property? Are we using that property to give it on rent or are we using that property for business? If you are using it for business, then it is PP. If you are giving it on rent without significant service cost, then it is PP. Sir, we have taken a property on finance lease. We have taken the property on lease, ROU, right to use the asset, and then we have created a paying guest. So paying guest when chartered, you are not charging only for the rent of the room, but you are also charging it as a service cost. Food you give, electricity you give, bed you give, little bit of furniture you give, security you give, so a lot of other facilities you are giving. But if you are giving the property only for the purpose of rent, no other facility, then it is investment property. But you are charging rent with the cost of lot of other services, and the major cost is of services only, then it should be treated as PP. So I come back. If you have given the asset on lease, from lessee's perspective, that means he has taken the asset on a lease. If he has taken the asset on a lease and using it for business, then PP. Using it as an for rental to others, then it is investment property. Paying guest, you are giving it, then you are giving paying guest not only for the room, you are charging the rent only for the room, but for the services, then it should be treated as PP. It is your business. Am I clear? Yes, sir. Now let's think from lessor's point of view. If lessor has given it on operating lease, then it's an investment property. If the lessor has given it on finance lease, then it is not a property for him because he has already de-recognized the property. Am I clear? So again I tell lease. From lessee's point of view, from lessor's point of view. From lessee's point of view, he has got the asset, that is right to use. If he is using it for the business, PP. If he is using it for rental to others, then investment property. If he is using it paying guest, then chartered. If the cost of service is dominant, then PP. If the cost of room is prominent, then investment property. Am I clear? From lessor's point of view, operating lease, he has given it on operating lease, investment property. If he is given out on finance lease, it's not a property for himself because he has de-recognized the property. Correct. If there is a lease within the group, that means one subsidiary has given the property on lease to another subsidiary, or parent has given on lease to another subsidiary, or parent has taken on lease from subsidiary. So it can be subsidiary to subsidiary, parent to subsidiary, subsidiary to parent. In whichever case, in separate financial statements, you will treat it as per point number 2 only. But in consolidated financial statement, it will be treated as PPE if the property is within the group. That means, suppose I have taken a property from a company which is within my group. Suppose I am parent, I have taken the property from subsidiary. Subsidiary will classify it as investment. Subsidiary is lesser, I am lessee. Subsidiary will classify it as operating lease, financing lease, depends. I will classify it as a PP or investment property, depends. But in consolidated financial statement, it will always be classified as PP. Why? Because the property is within the group and you are doing business over there. So within the group, CFS may, it will always be classified as PP. So if there is a property which is leased out within the group, then in consolidated financial statement, it shall be classified as PPE. I repeat, subsidiary has given a property on lease to parent, then subsidiary is a lessor, parent is a lessee. Parent in its separate financial statements will classify as per point number 2. Subsidiary in its separate financial statements will classify as per point number 2. But in consolidated financial statement, it will be classified as PPE. Why? Because the property is within the group and you are doing business over there. Am I clear? Yes, sir. Now chartered, property under construction should be classified. If the property is under construction, capital WIP, what is your intention? My intention is to use it for business, classified as PP. No sir, my intention is to give it on rent, then classify it as investment property. Sir, I have not decided that whether I will in future what will I use it, then temporary classify it as investment property. Am I clear? So if there is a property under construction, find out the intention. If the intention is business use, PP. If the intention is rental income, then investment property. If the intention is not determined, presently classify it as investment property. Later on you can reclassify it. If a property is used for both doing business as well as investment, for example, I have got a classroom, correct? 2 classroom, one on the first floor, one on the second floor. First floor ka classroom mein property is entire. First floor, second floor. This is entire in property. First floor mein I am using the classroom for my business, myself, and second floor I have rented out as a classroom to somebody else. First floor has a separate title deed, second floor has a separate title deed. The first floor should be classified as PP, second floor should be classified as investment property. Digested? Yes. Now come back. Now chartered, there is a floor on which few hours I use it, few hours I give it on rent. Correct? Now, chartered, if few hours, made chartered, how many hours I am using, how many hours I am giving on rent. If significant hours, I am using, then PPE. If significant hours it is on rent, then investment property. You cannot find out significant hours. Suppose property runs for 12 hours a day. I am using it for 6 hours and I am giving out on rent for 6 hours. Then you cannot find out PPE. I am using it for 12 hours, 10 hours and I am giving it on rent for 2 hours. PPE. I am using it for 2 hours, 10 hours I am giving it on rent. Then investment property. Am I clear? So property which is used for both business as well as investment purpose, then you have to find out whether the properties are separate title deeds are available. Yes, then you can bifurcate the property, investment property and PPE. But chartered, if you cannot bifurcate, like in my first example, first floor, second floor, you can bifurcate. So one is PPE, one is investment property. But in the second case, there is only one room which I am using it as well as I am giving it on rent. Then you have to find out significant portion. Significant portion, that means significant time I am using it for business. Then PPE. Significant time I am renting it out. Then it is investment property. But this significant part you cannot find out. Then it is chartered. Investment property. Sorry, PPE. Another example, school. School has a big hall which they use it also and they give it on rent on marriages. Now chartered, majority time they are using it at school. On holidays only they are giving it as rent for marriage or convocation purpose or conference purpose. That means insignificant part is for rental, significant part is for business. That should be classified as PPE. Am I clear? Yes or no? Now chartered, a business as a conference hall which they keep on letting it on other people for marriage and conferences. Whenever they want to hold conference, they also hold it over there only. So minority time they hold conference, majority time they rent it for other conference and marriages. Then it is investment property. Okay. So you gave sir 3 examples. Example number 1, classroom wala tha. You are using it majority time, PP, you are renting it out for minority time. Second situation, you are renting out for majority time, using it yourself for a minority time, investment property. School has a big hall which they give it to other people for conference and marriages. Then PP, why? Because majority, significant of the time they are using it for, school purpose. Only vacation and holidays they are giving it on rent for generating additional income. So insignificant is investment, significant is business, classified as PPE. A person has created a hall which gives it out on rent for conferences and marriages, but that entity holds its conferences over there only. So insignificant time it is using for its conferences, significant time it rents out, then investment property. I hope this is clear when it is dual usage wala property. Now chartered, staff quarters. If you have got a property which is for staff quarters, for staff quarters, then chartered it should be classified as PPE. Now, recognition and measurement. This chart is that's why initially I told you first need to read PPE, then come over here. In days 16, then you come over here. This standard will become a cakewalk for you. Principle and recognition. Over there, what did we study? Cost should be measurable. Yes, future economic benefit should be there. Correct? If those conditions are satisfied, you can recognize. Initial recognition at cost. How you can recognize it? Purchase, construct, deferred, credit. Purchase cost, if you remember what we used to take, purchase price, yes. Trade discount, yes. Then non-refundable taxes, yes. And any expenditure incurred for bringing the asset into ready to use condition, all expenses should be added. Borrowing cost, if it is a qualified asset, it should be added. Correct. So construction cost, all material cost or labor cost, all direct expenses attributable for construction should be added. What should not be added? Staff training cost should not be added. Opening ceremony, you are inaugurating the property, that should not be added. Advertisement of property, that should not be added. So any expenditure incurred for that purpose should not be added. So it is copy paste from PP, purchase and construction. Deferred credit, you have purchased an investment property and you are going to make payment in installment. So that would include some finance cost. So finance cost should be separately identified and transferred to P&L. Exchange. Exchange mein we had studied cost of investment property acquired will be equal to fair value of property given up if commercial substance exists. Correct? Cost of property acquired, cost of investment property acquired will be equal to fair value of asset given up provided commercial substance exists. Commercial substance exists matlab that means fair value of the asset acquired and the fair value of asset given up is completely different, or it will lead to change in cash flows for the entities acquiring or giving up. Correct? So this again I told you it is completely based on PPC. I have written over here same as discussed in PP. Subsequent expenses, additional expenditure. If additional expense ka benefit is more than 1 year, then capitalize it. Less than 1 year, charge it to PL. Correct? Replacement cost. First, if you are replacing a part of the property, then de-recognize the old part, recognize the new part. De-recognize the old part, recognize the new part. If you cannot de-recognize the old part, you don't know the value of the old part, then whatever is the value of the new part today, year 0, year 1, year 2. 2 years have gone, over here you are replacing the part. Correct? So now charted year, so book value of the part should be de-recognized. Year ka book value you don't know, but you know the cost today is 50,000. Then you go behind, find out its present value. Suppose the cost comes to 40,000. Then charge 2 year ka depreciation. Suppose the life of this asset is 5 years. So 40,000, 5 years, 1 year ka depreciation 8,000, 2 years ka depreciation 16,000. 16,000 you subtract, 24,000 is today's book value. So you de-recognize 24, recognize 50. Sir और एक बार समझाओ once again. Now definitely once again आपके लिए 1 year 0, year 1, year 2. Here on this date you are incurring a cost of replacement 50,000. Whatever as part you are replacing, that part ka cost minus depreciation for 2 years. That means carrying amount of the past replaced. Carrying amount of the part replaced should be de-recognized and cost of the new part should be added. Correct? Yes. But carrying amount of part replaced you don't know. Why? Because when you purchased it initially, you did not know what is the cost of this part. Then what do? Today cost is how much? 50,000. You find out its present value 2 years back. You found out it's 40,000. Then you know life of this part is how many years? 5 years. Each year ka depreciation 40,000 by 5 is how much? 8,000. So 2 years ka depreciation 8 plus 8 16. 40,000 minus 16, its today's carrying amount will become 24. So 24 you de-recognize and 40 you add it to the asset. Component accounting. If any component of the property is significant and has a useful life different from the investment property. For example, interior decoration. It's a significant cost in investment property and its useful life is different from the investment property. Then interior decoration and investment property should be depreciated separately over their specific useful life. Am I clear? Yes. Depreciation, same, you can do any method, SLM or WDV. But charted in balance sheet, you cannot show this asset at revaluation. So revaluation model for investment property is not available. Sir, why revaluation model is not available? Charted, if you revalue investment property, you will create an OCI wala funda. Correct? And that OCI, when when an investment property is sold, that means you are creating reserve. Revaluation reserve is nothing but like a capital only. Can you pay dividend out of revaluation reserve? No. So revaluation reserve is like your capital only. Do you think capital means that capital which you are using it in business? Is investment property, are you using it in business or it's your side income? Sir, it's my side income. So don't you think you are trying to generate extra capital by revaluing your investment property? Yes, that is disallowed. So from plant and machinery you revalue, you create a capital. Why? Because plant and machinery is your trading asset. But is investment your trading asset? No, sir. So investments you revalue, that means you are creating a revaluation reserve, that is capital, which is disallowed. No? Correct. So only cost model is available. Balance sheet may also cost, less accumulated depreciation, less accumulated impairment loss. Reclassification. Now, earlier you had classified as in property, plant and equipment or inventory. Now you are reclassifying as investment property. First you understand, then I'll give an example. Initially आपने क्या recognize किया? PP. Now you want to recognize that investment property. Now relax. So when PP to investment property, the fundamental rule, whatever was the old asset, uska carrying amount will become the cost of the new asset. Am I clear? Cost of the old asset as on carrying amount of the old asset as on the date of reclassification. Carrying amount of old asset as on the date of reclassification will become the cost of new asset. Correct? Yes. Now PPE was there. PPE 1 lakh ka you purchase, depreciated. Today the carrying amount of PPE is 70,000. Correct? Yes, sir. Now you want to reclassify it as investment property. So carrying amount was 70, that will become the cost of investment property 70. Okay. Now chartered, swalpa tension, little tension. Suppose you had purchased the property for 1 lakh, depreciated 1 lakh, 90, 80 के बाद you revalued. You made it 88. Then depreciated 77. Now 77 में you are saying that 8,000 is revaluation reserve. So 77 is asset, revalued asset, and 7,000 is your 8. So 1 lakh 90, 80. You revalued, made it 88. So revaluation reserve is how much? 8,000. Then 88 got depreciated. Today it is 77. This 77 is PPE ka value. Correct? 8,000 is revaluation reserve. Carrying amount of the asset will be treated as 77 minus 8, 69. So investment property, it will become at 69. Correct? So if PP was carried at cost, the carrying amount of PP will become the cost of investment property. If PP was at revaluation model, then carrying amount of PP minus revaluation reserve will become the cost of investment property. Fair enough? Yes. Vice versa, chartered. Vice versa. Suppose there is an investment property. Suppose there is an investment property. Now chartered, that investment property, now you are reclassifying as PP. So whatever is the carrying amount of investment property, that will become the cost of PP. Then after you can follow revaluation model. But carrying amount of carrying amount of investment property as on the date of reclassification will become the cost of PP. Okay. So PP mein there are two options. If you are following cost model, then carrying amount of PP will become the carrying amount of investment property. Superb. If you are carrying PPE at revaluation model, then carrying amount minus revaluation reserve will become the cost of investment property. Yes. But sir, you are reclassifying investment property to PP. Then there is only one situation, that is carrying amount of investment property will become cost of PP. Correct. That means you will always consider cost of old asset, carrying amount of old asset on the date of reclassification as carrying cost of new asset. Carrying amount of old asset on the date of reclassification as the cost of new asset. Correct. Another example, you had classified as inventory. Correct. That inventory now you are considering it to be investment property. Now chartered, carrying amount of inventory will become cost of investment property. Okay. Similarly, investment property, now you are creating it a inventory. Then carrying amount of investment property will become cost of inventory. Okay. So, but inventory में एक drama है ना? What? Sir, inventory is valued at cost or NRV, whichever is lower. Correct. So, carrying amount can be whichever thing, no? Cost or NRV, whichever is lower. What did I say? Carrying amount of old asset will become cost of new asset. So, if inventory is carried in the books at NRV on the date of reclassification, then that NRV only will become what? Cost of investment property. Correct. And if you had investment property, then that will become carrying amount of investment property will become carrying amount of cost of inventory. Then that cost will compare with NRV and record it. Okay, so carrying amount of old asset as on the date of reclassification will become cost of new asset. So it can be two possibilities, PPE to investment property or investment property to PPE. Correct? Second charted, inventory to PPE, inventory to investment property, or so there are two possible cases, no? PPE to investment property. Case 1, carrying amount of PPE will become cost of investment property on the date of reclassification. Okay. Case 2, carrying amount minus revaluation reserve of PPE will become cost of investment property. Correct. Now charted, if it is investment property to PPE, earlier it was investment property, now you are reclassifying as PPE, then carrying amount of investment property will become cost of PPE. All this is happening on which date? Date of reclassification. In this case, when you are reclassifying to investment property, your evaluation model will start. But if you are classifying to investment property, you can have the option of revaluation model. Second is investment property to inventory. So carrying amount of investment property will become cost of inventory and depreciation would stop. Then this cost and NRV you compare and record it. Carrying amount of inventory will become cost of investment property. This carrying amount can be cost or NRV, whichever is lower. And as soon as it becomes investment property, there is no option of revaluation model, but depreciation starts. Correct. Understood, chartered? Yes. Now, derecognition. Chartered, derecognition of investment property. How will you derecognize? So, reclassification mein the rule is mentioned over here, derecognize. When you sell investment property or you give it on finance lease, you derecognize it. Or you say you are holding this investment property for sale now. So, we will classify it under 109 as non-current asset held for sale. Am I clear? So, either by sale you can derecognize, or by finance lease, you give it on finance lease, you can derecognize, or on retirement you can derecognize. Am I clear, chartered? Yes or no? So investment property में बहुत कमी बात थी. If I recap entire thing, land, building both held as owned or on right to use for the purpose of rent, capital or undetermined purpose is an investment property. Any property which you are giving on rent and that rent does not include significant cost of services, then it is investment property. If it includes significant cost of services, then it is PPE. Example of hotel and paying guest I had given. Then charted lease from lessee's point of view. Lessee, I have taken an ROU, using it for business, PP, using it for rental or capital appreciation, investment property. If I am a lessor, operating lease, investment property. Financial lease, no property, only derecognized. If there is a lease within the group, in separate financial statements, so they will follow lessee lesser ka rule. But in consolidated financial statement, it will always be classified as PPE. Correct? Yes. In chartered, in case of dual usage, if you can separate first floor, ground floor, separate title deed, separately independent can be sold. Then one part as PPE, the other part as investment property. If it's the same property which is used as business also for renting also, then significantly for business, PP, significantly for renting, then investment property. Significant cost, significant you cannot find out, PP. I had given you example of classroom, school and conference room created by an entity. Correct? If it is for staff quarters chartered, it is always PP. You can recognize if cost is measurable and future economic benefit there. Initially, when you recognize purchase price of the property, less trade discount, add non-refundable taxes, add any expenditure incurred on the asset to bring the asset into running condition, that is registration, legal charges, any expenditure, that is completely you have to study from PP. Deferred credit, that means you are making the payment in installment, then finance charge should be separated. If you are buying on exchange, then cost of investment property acquired is equal to fair value of asset given up, provided there exists a commercial substance. Any subsequent expenditure, benefit for more than 1 year, capitalize. Benefit less than 1 year, do not capitalize. Replacement part. Replacement. Derecognize the old, carrying amount of old part, recognize the cost of new part. If carrying amount of old part is not available, then cost of new part, present value it to date of purchase, depreciate it up to replacement date, then remove that carrying amount, add the cost. Component accounting. Investment property has a significant component and the life of the component is not as similar to life of investment property, separated and depreciated separately. I give you example of interior decoration. Am I clear? Depreciation same as PPA, straight line method, WDV method, any method you can choose, but you do not have an amortization model. Sorry, you do not have a revaluation model. Second, we discussed in balance sheet it will appear at investment at cost, less depreciation, less impairment as usual. Correct? In case of reclassification, carrying amount of old asset will become cost of new asset on the date of reclassification. If you are carrying amount to investment property, revaluation model will cease, depreciation will start. But if the old asset was at revaluation model, then carrying amount minus reserve will become the carrying amount of old asset, that will become the cost of new asset. Am I clear? You can derecognize the asset under 3 conditions. Sale, 2, when you transfer it on lease, financial lease, 3, you have reclassified as asset held for sale chartered. Am I clear? That's all for your investment property. See you in the next lecture with the next 10 days. Till then, bye-bye.